Okay, so the morning star, basically the morning star is a combination of three candles, as you can see right here. So we have our first bearish candle, and then we have a small bullish or bearish candle in the middle, and then we have a bullish candle. So this is what makes a morning star. So basically the morning star pattern is considered as a bullish reversal pattern. It often occurs at the bottom of a downtrend, and it consists of three candles. So the first candle is bearish, which indicates that the sellers are still in control of the market, but the second candle is a small one, which represents that the sellers are in control, but they don't push the price much lower, and this candle can be bullish or bearish, so it doesn't really matter what color this candle is. The third candle is a bullish candlestick that gapped up on the open and closed above the midpoint of the body of the first day. So this is actually on the daily chart. Let's just say this is on the daily chart. So here we're looking at this as if it's a daily chart, but basically the candlestick holds a significant trend reversal signal if it's actually formed like that. But the morning star pattern shows us how buyers took control of the market from sellers. When this pattern occurs at the bottom of the downtrend near a support level, it is a powerful trend reversal signal. So what we're trying to say is that when this candle open, there should be a bit of gap. As you can see, this one closed a little bit lower than where this candlestick opened. So if I can just quickly zoom in for you right here, you can see that there is a bit of gap from where this candlesticks opened compared to where the last candle closed. So if you can see with this one, it closed exactly here, and then that's where it opened. But here there's a bit of gap, so we need to look at that gap for it to be a valid morning star and more powerful. So the bigger the gap, the more powerful it is. So anyways, but then at the same time, we need to understand that this is a daily chart. So here as I said, we're looking at a daily chart. So what is happening that this is another day, this is another day, and this is the current day at the moment when we're looking at this pattern right here. So this needs to close above the midpoint of this. So you need to make sure that it's actually closed above the midpoint of this candlestick. That's when we can confirm that, okay, cool, this is actually a valid morning star pattern, whether it's on a daily chart, it's on a weekly, it's on a monthly, whatever time frame that you're trading. But basically we usually trade the 1 hour, 4 hour. So you'll be looking for these patterns right there, exactly as it is being shown to you right now. So if it's actually at a support level, so if we have a support level and this actually forms, that means that the signal for this reversal is very, very powerful. And remember, this is only found at the bottom of a downtrend, so this is only to confirm our the end of a bearish market and going into a bullish market. So make sure that you're always looking for this at the bottom of a downtrend, right? So for example, in this market right here, as you can see, we have it right here at the bottom of a downtrend. So we were having a downtrend, and then this occurred right here. As you can see, we have our long bearish candle, and then we have the small body here. This time is actually white, showing that it's a bullish candle, it's a small bullish candle. So as we said, this doesn't really matter what color it is, but it needs to be small, right? It needs to be small. And then we have our big candle, and if you just take a look at this, we can see that there is a bit of gap from where it opened and where it actually started, where this previous candle started. But basically it needs to be a bit of gap for it to be a more powerful signal. So as I said, the larger the gap, the bit is actually more powerful, because that means that the buyers are starting to gain a lot of momentum. As you can see right here, what happened, well, as you can see, the market just shot up, and you could have caught yourself a lot of pips right here and made a lot of profits, right? So here's a live quick example. So I was just looking at Nasdaq this morning, and we basically have a morning star just here on Nasdaq. It's actually a morning star right here. As you can see, we had a bearish candle, and then we have a small body candle, and then we have this bullish candle which closed above the midpoint of this body candle here, the body of this previous candle, so confirming that as well. So but we can see you also have a doji, as we explained a little bit earlier on about dojis. So as you can see, this is actually like a double confirmation here. We have a morning star, and then in that morning star we actually have a doji. So remember, we said this middle candle can also be a doji, or it can be just a small candle. So this is a confirmation here, as you can see, is right here in action. It gave us a confirmation of the end of this downtrend that was going on since early morning, since the market opened. It's on a Monday today, so the market opened, and then it crashed a little bit, came here, and then it's a turnaround. So here we can expect it to carry on going, or maybe reach these levels up here. But basically this is just a live demonstration of dojis in the market, as well as the morning and evening stars. So try to understand the psychology behind these candlesticks. Why are they creating and why are they forming in the market? So this is basically how professional traders analyze the market based on candlestick patterns, and this is how you will also be analyzing the market once you master the candlestick patterns and the psychology behind the formation. So you're just understanding why exactly this is happening. So this candlestick formations is not complete without the rest of the tools to get the extra. So remember to always have at least more than one confirmation for you to before entering a trade. So let's go and look at the opposite of this candlesticks, which is going to be our evening star. So you can see this is how it looks. It's obviously the opposite of the morning star, also formed with 3 candles, but this one, the first candle, needs to be bullish. So as you can see, it's bullish. So remember, we on an uptrend right now, and then this appears right at the top of that right at the top of that trade of that trend. So right at the top of the uptrend, we then have this coming up, and then this is signaling a reversal. So remember, we might actually have a resistance right at the top here. So we have a resistance, and then right at the end of that, we have our bullish candle, and then we have our a small candle right here. So it can be either bullish or bearish, but it needs to be small. And then we have a bit larger candle right here. Remember, it must have a gap as well here from the closing price of the previous candle and the opening price, right? So it's a bearish candle. So this confirms our evening star, because now the sellers are in control. So we are expecting this market to just start falling from here, right? So once this candle formation is complete, remember we said this candlestick right here needs to close below the midpoint of this candle. So this candle right here, so we can say that the midpoint is somewhere around there. So as you can see, it's confirmed. It closed below the midpoint of that candle, confirming that it's a complete evening star formation that we are looking at right now. So the evening star is considered as a bearish reversal pattern that usually occurs at the top of an uptrend. So the pattern consists of 3 candles, again just like the morning star, but the first candle is bullish candle in this pattern, and the second candle is a small candlesticks. It can be either bullish or bearish, or it can even be a doji or any other candlestick, right? But it just needs to be smaller than the other 2 candlesticks. So the third candle is a large bearish candle. In general, the evening star pattern is the bearish version of the morning star pattern, so it's the opposite. You're looking for exactly the same formation, just in the at the end of an uptrend instead of a bearish this time. So we're looking for signals to sell or potentially exit an uptrend that we're in, and starting to look for an opportunity to re-enter the market going down, so that we can ride the wave going down again. So the first part of the evening star is a bullish candle. This means the bulls are still pushing the market higher. The formation of the smaller body shows that the buyers are still in control, but they are losing the momentum or the power as they had once they were pushing the market up, right? And then the third bearish candle indicates that the buyers' domination is over, and a possible bearish trend is likely to start happening. So if we can take a look at this in an example of an actual chart. So as you can see right here, so the chart below illustrates how the evening star represents a significant trend reversal. So as we can see right here, again, we're in an uptrend. So the uptrend is now coming to an end. As we can see, this pattern formed right here. So when it formed, guess what happens? As you can see on the screen, the market started falling. It started falling very, very hard. So there was a confirm. So you'd actually look for opportunities to enter a trade straight after it closed. So one tip is to never ever confirm a signal or a pattern before the final candle actually closes. So you only enter trades when this candle closes, because it can move here, but then in the last few seconds the candle can actually just be moved all the way to where it started. So only confirm a pattern when the last candle or that candlestick is actually closed. So that's when you start looking for opportunities to enter the trade, and then you basically have your confirmed candlestick pattern. So as you can see right here, it was confirmed. The uptrend ended right here, and then it started falling, and the bearish market sellers were now in control. So this trend was actually up, and then once this candlestick formed, it basically started falling down. So the trend that created the long bullish candlestick is losing momentum. The final candlestick gapping lower than previous candlestick, confirming the beginning of a downtrend. So with this pattern, we are looking for potential reversals right at the top, right at the end of an uptrend. We're looking for selling opportunities, or at least exit your previous position. So as you can see, we had our bullish bar right here, and then we had our small candle. It was bearish, and it's more like a doji, a gravestone doji, and then we had another candle right here. So it almost looked like a pin bar, but if we zoom in a little bit, you will see that it actually did try to reach this level, but at the same time it also closed right about the midpoint of this first candle right here. As we said, we needed to pass the midpoint of the first candle for it to be a valid evening star pattern, right, formation, right? So that's basically an example right there. Let's go on to our next candlestick pattern.